Hello, good morning, and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Tuesday, the 8th of July. The European markets have taken a bit of a negative steer once again from Wall Street, being a slight bit of correction on Wall Street, and the Asian markets have fallen overnight. And also, I think that this is coming the back of just the last couple of days, actually. The data out of Germany has been pretty disappointing. Actually, you had yesterday the industrial production data out of Germany was disappointing, and that drove the European stocks lower throughout the session. And then that sort of filtered through into the States, where there was a bit of a lack of real data, and then again into Asian session. No real data there, and again now this morning there's been the German trade balance data that has been, although the trade balance actually improved very slightly, the only reason that improved was the fact that imports had declined more than exports. So that is not a really good state of affairs in terms of economic growth and in terms of just the general feeling of confidence in Germany. So that is one of the reasons I believe why the German market is down about 0.3% at the moment. FTSE's down around about 0.2. So a bit of a slight correction there, and I'll talk about FTSE more in my chart of the day, which is coming up in a little while. In terms of currencies today, it's fairly mixed actually. There's not a great deal of movement, slight bit of euro weakness, and the sterling is slightly stronger, but no major moves being seen as of yet. Across the board, pretty much mixed outlook for the dollar, although there is slight continuation in the Aussie and Kiwi dollar rallies that we've seen in the recent days. So that continues, but other than that, fairly flat on the dollar. In terms of economic data that we're looking out for today, as I said, we've had the European trade data. You're now looking towards the UK manufacturing production at 9:30. That's expected to come out as with a nice and strong 5.6%. 5.6% there. Wrong chart. Sorry, that's not the right chart. 5.6% there on the UK manufacturing production, and that would be again an improvement on the 4.4% year-on-year data that we had last month. I will quickly show you the dollar index, which is slightly just tailed off in its recovery in the last couple of days, taking a bit of a pause for breath, and that's coming interestingly around that 200-day moving average. But I still see that this 80.4 level here, I think that's a bit of a pivot point, so just bear that in mind if this rally does continue. For the States side, there's not any real data that's going to be looked at, but there is a Fed speaker, one of the first of, I think, 5 that are speaking throughout this week. It's Narayana Kocherlakota today. He's on the dovish side of the scale. He basically he's going to be talking at 6:45 this evening, and he's sort of reluctant. He's a reluctant on the taper, and he just tends to come out with comments that suggest that he wants more confirmation of the recovery before they start to tighten. So just watch out for that, see if there's any change to that view in light of the recent increase in non-farm payrolls. Anyway, so that takes me on to my chart of the day, which is the FTSE 100. FTSE, interesting chart I think at the moment, because this is on the daily chart. I'll take you a little bit through history in the last couple of months. You've got a key one-day reversal there, which induced a bit of a correction. You then had a hanging man, or it could be considered to be a gravestone doji, which again induced a correction. And what we've now seen in the last 3 days is a strong bull candle followed by a doji, followed by a strong bear candle. Now that is, to all intents and purposes, called an evening star formation. which is a bearish formation, and suggests that perhaps we could even be inducing yet another correction. You do have this on the daily chart. This is going further out. You do have this uptrend that currently comes in at 6728. We're currently around 6810. I'll show you on the intraday chart where we're at in terms of support resistance. 6800 comes in a bit of a support area. The bigger pivot point probably is 6780 on FTSE, and then obviously back down towards that key low that we saw at around 6700. So 66,800 is the initial support, and then 6,780 below there. In terms of resistance, you'd probably be saying that this around 6,840, which had been the a bit of a breakout support through that, is probably now a breakout. That old support now turns into resistance, so that's 6,840 before the that high that comes in at 6,875. Okay, well, that's my outlook on the FTSE. As I said, it's a little bit of a corrective pattern that we've seen on the daily chart, and if you look at the some momentum indicators, the stochastics have crossed over actually, and that's happened above the 80 point, so that would suggest that maybe starting to look at a sell signal there on the stochastics. Not a great deal else on the MACD or the RSI, but yeah, as I said, this 3-day formation here on the candlesticks is a corrective formation. Okay, well, I wish you good luck in your trading on FTSE today, and I will speak to you later. Thank you.